Welcome back. I'm Majid, and this is Financial Crime Awareness Hub. Let me describe something that happens inside almost every bank every single day, and that most customers never ever know whether such a thing exists even. So behind the scenes, a bank has one internal account, not a customer account. It's an internal account where hundreds and sometimes even, I would say most of the time, thousands of transactions get temporarily parked before they are sorted out and sent to their real destinations. Small deposits, failed payments, corrections, overnight holds, all of it briefly. They are sitting in one place. Looks harmless, right? It's basically bookkeeping, okay? And most of the time, it is exactly that, a completely legitimate operational tool. But I would say here's the problem. If hundreds of different people money is sitting in the same account at the same time with no name attached to each piece once, okay, how do you know which piece belongs to who? And more importantly, how would you know if one of these pieces was dirty money, deliberately mixed in along with the clean money, right? So this account has a name. We call it a concentration account. And today we are going to unpack or discuss why one internal bookkeeping tool creates one of the trickiest tracing problem in the entire industry. Let's start with the concentration accounts actually is and why banks use them in the first place. Okay, so a concentration account, in simple words, is an account a bank uses to pool funds from lots of different sources into one place before sorting them out and uh, move it to specific accounts, which actually they need to move into. Okay, so you will hear different terminologies. Okay, sometimes we call them settlement account, a sweep account, a suspense account, which I'm sure most of you have heard about it, or a collection account, okay, and also omnibus, okay. So these are different names, same basic idea. One central account during the plumbing work, I would say, behind the scenes, okay. Why do banks use them? Purely for efficiency. Instead of managing thousands of tiny individual moments one at a time, the bank pools everything together, processes it in bulk, and then sweeps the money out of its correct final destination, a customer account, another bank account, wherever it needs to go. So it streamlines cash management and it makes reconciliation simpler. There's nothing illegal about a concentration account. Every major bank has it, okay? It's the equivalent of a big sorting office, I would say, like a post office, right? Every letter passes through it before it reaches your mailbox. So if it's just sorting, where does the risk actually come from then? Let's see it now. I'd say here's the problem. In a sorting office, every letter still has your name and address on it the whole time. In a concentration account, that's not always true. Once a customer money lands in this pooled account, it can lose its individual identity. It's not showing on the customer's statement. It's just part of one big number sitting alongside hundreds of other people money all mixed together. So money launderers understand this deeply. Okay, when they have something wrong to do, they know such kind of techniques also. In retail banking, someone can push lots of small deposits from multiple sources into that account. And because everything blends together, it becomes very difficult to trace any single deposit back to where it actually came from. In corporate banking, the same trick works at a much larger scale. A high volume of legitimate corporate transactions can easily hide a much smaller number of illegitimate ones simply because there's so much activity to find about to go through, right? Think about it like mixing one glass of dirty water into a swimming pool. Once it's there, good luck finding it again, right? So let's really sit with that problem for a second and let's discuss now. Okay, so imagine, I would say, a concentration account that process, you know, deposits from thousands of different retail customers every single day. By the end of the day, all of that money has been swept out of its correct destinations, and account itself nets back to zero, because these suspense accounts must be zero eyes at the end of the day. Okay, clean, tidy, balanced. Now, pause the video and think like an investigator for a second. If one of those thousand deposits was actually dirty money, deliberately mixed in with 999 completely legitimate, ones, and the account already zeroed out and closed for the day, how exactly would you go back and find it, right? This is really a question for all of us, right? That's actually daily challenge compliance teams, branches, they face with these accounts, reconciliation teams as well. And it's exactly why regulators and auditors pay close attention to how they are controlled. Let's go back to that internal account from the start of this session and put these ideas together. All right. So remember that internal account we described at the start is the one quietly parking hundreds of transactions before sorting them out. Let's label what's actually happening inside it. First, this is a concentration account, sometimes as we said called a suspense sweep account, omnibus. Funds from many different sources temporarily pooled in one place. Then core vulnerability is that pooling obscures the origin and destination of individual transactions. Once the money is mixed in, tracing any single piece back to its source becomes genuinely difficult. Then third is the case. This is exactly how illicit funds gets blended with legitimate ones, not through some elaborate schemes, but simply by taking advantage of a completely normal everyday banking process that was not designed with tracing in mind. Fourth, and this is why I would say the account itself needs its own set of controls, completely separate from how a normal customer account is monitored. So, what would those controls actually look like? Let's talk about where this goes wrong and then how to fix it. First thing, let's make this, I would say, practical. Here's what tells you a concentration account is being managed poorly or being deliberately, I would say, exploited. First one, red flag. Customers have, direct access to the concentration account itself. That should never happen. Red flag number two, individual transactions never show up on the customer's own account statements. If a customer cannot see it, neither can anyone review their activity later. Number three, the same person initiates, approves, and reconciles transactions. No segregation of duty means no independent check on what's happening. Number four, reconciliation is infrequent, inconsistent, or done by someone tied to the transactions themselves. Number five, no regular internal or external audit of the account's activity at all. Spotting those gaps is one thing. Now, here's actually we should look at this practically. This, I would say, it's important for you to know on your actual, jobs as well. Step one, as we said, prohibit direct customer access to the concentration accounts, no exceptions here. Number two, make sure customer transactions are still captured in customers' own account statements, even though the money passed through a pooled account behind the scenes. Step three, segregate duties. So, when you have done transaction on a branch, so branch performs the transactions, and then the operations teams, perform the reconciliation. That's segregation of duties. Okay. So separate people should initiate, approve, and reconcile transactions, never the same person doing all the three things together. Step four, reconcile the account frequently. So in operations generally, reconciliations are separate teams which performs reconciliation of those accounts on a daily basis and have done it by someone independent, which is operations, let's say, and not the person who processed them, such as the case of the branch. Number 5, conduct regular internal or external audits and train employees regularly on the risk these accounts create. Let's test what we have learned so far with a question. So, a bank's retail operations team uses an internal account to temporarily hold small deposits from thousands of customers before sweeping the funds into designated destination accounts overnight. The account nets to zero by the end of each business day, and individual customer transactions do not appear on their account statement. What is the primary money laundering risk this creates? Option A, the account pays no interest, reducing profitability for customers. Option B, pooling customer funds together obscure the origin and destination of individual transactions, easing the mixing of illicit and legitimate funds. Option C, the account requires manual reconciliation, increasing operational cost. Option D, customers can access the accounts directly, which improves transparency. You may pause your video, and out of these 4 options, you have to select one. You'll see the answer on the next screen now. So option B is correct. So this is exactly the vulnerability we have been talking about. Pooling funds together obscure the origin and destination of individual transactions, and that's precisely what makes it easier to mix illicit money with legitimate money. Option A is wrong. No interest on the account is a real consideration for a bank, but it's a profitability question, not a money laundering risk. Option C is wrong too. Manual reconciliation is an operational cost, and honestly, reconciliation is part of the solution here, not a problem. Confusing a control with a risk is an easy trap to fall. Option D is also wrong, and it's backward on 2 counts. Customers should never have a direct access to the concentration account. That's one of the core controls we just covered. And even if they did, it wouldn't improve transparency. It would remove one of the safeguards that's supposed to be there. Now let's bring everything together. Okay. Here's what I want you to take away from today's video. A concentration account is not a crime. It's a camouflage that makes the crime hard to see. Every major bank has one, and for good reasons. It's an efficient, completely legitimate tool. But efficiency and traceability sometimes pull it opposite directions as well. And that's exactly the gap a determined launderer will look for. The fix is not complicated. No direct, access for the customers on such accounts. Transactions are still visible on customer statements, segregation of duties, independent reconciliation, and regular audits. Simple controls consistently should be applied. Now, once our money has been pooled and moved, there's another classic way to disguise it. One, I'm sure most of you are waiting probably for this topic. Okay, so one that hides in something as ordinary as shipping invoices. And before we get there, let me tell you how to keep building on what you have learned today. In the next video, we are looking at trade finance, which is the most important and the lengthy topic itself. So, like, a $500 invoice for goods, let's say, that are actually worth $50,000. So, okay. Trade finance is one of the oldest, most paperwork heavy, department, I would say, of the banking, and that makes it one of the easiest places to hide money in the plain sight as well. All right. So we'll see in very, very detail over invoicing, under invoicing, all those concepts in our next video. And if you are preparing for CAMS exam, remember Advice Cube Consulting has covered you. We have got you covered with question bank and study notes built specifically for CAMS, CFE, CGSS. We have also designed an e-learning course including an AI bot trained on a specific study material. So you don't need a trainer. You can simply ask the question anytime and you will get your answer promptly, so that there are no time restrictions at all on you. We have also a Telegram group for candidates who are preparing for the exams. They can discuss any questions or confusion which they may have. Not but the least, it's that in case if you wish to reach out to me, you can drop an email on info@wisecubeconsulting.com or contact me on the given WhatsApp number. I'm Ajit, and this is Financial Crime Awareness Hub, and I'll see you in the next video.